more media articles about negative interest rates. Let's have a look. Good morning, everyone. I'm Florian Heise, and welcome to another episode of Heise Says. I hope you're having a good start to your weekend. I'm here with my stein of coffee and a good breakfast, relaxing. And before I jump into my chores, and this weekend it's going to be working on my back fence, which will probably take a while. I'm going to try and dig it by hand. We'll see. We'll see if I can save the money renting equipment. I'll let you know. I thought we'd read through this article from ABC. Now, once again, this is more discussions of negative interest rates. You know, apparently what the Australian Financial Review is referring to as conspiracy theories, but it's appearing more and more in the media. Maybe it's prepping the people for this concept. Maybe. So, Reserve Bank may slash rates to 0.25%, but reluctant to dip into negative territory. Just how insane does that sound? How desperate must our, Reserve Bank leaders, our governor, our politicians, how desperate must they be getting if they want to create such an artificial scenario? Fundamentally, when you lend someone money, you lose money. It just shows you how they are manipulating the system, and they have to prop it up, to keep it going. Maybe I'm just getting too cynical for all of this, guys. So central banks around the world, including Australia's Reserve Bank, are under increasing pressure to cut interest rates to stimulate their economies. It comes as the European Central Bank cut its benchmark deposit rate further into negative territory, negative 0.5% from 0.4%. and reintroduced a bigger-than-expected stimulus package, pledging to buy 20 billion euros worth of bonds every month indefinitely. Indefinitely. So where is that going to go? Where is that money going to head? I've noticed silver's dropped down. So maybe are people pulling out of, precious metals and security, to hold on to their wealth and pumping it back into the market? I mean, if they're going to be pumping this up forever, it's going to do something to the equities, isn't it? More than 30 countries have lowered their benchmark borrowing rates this year amid rising concerns about slowing growth, recessions, trade wars, and a potentially chaotic Brexit. The last time so many policymakers cut rates or introduced stimulus at the same time was during the global financial crisis a decade ago. This will place additional pressure on the Reserve Bank to cut rates further. Given an appreciating exchange rate will undo some of the benefits of lower interest rates locally, NAB chief economist Alan Oster wrote in a note. Well, yes, and that comes down to just the impact of all of the products that we're importing. So everything here we're exporting will be more affordable to the world, and simply everything we're importing will cost more. We're importing low tech, tier 1 civilization goods, and we're importing high tech. What do you think will happen to our, cost of living? Particularly with petroleum, that's the one I'm most worried about. So, Australia's cash rate is currently sitting at a record low 1%, following 2 back-to-back rate cuts in the last few months. What do you think would happen, guys, if they do cut rates again? If next month they cut rates and then they cut rates? What do you think that'll do to consumer confidence? I looked at a Finder piece the other day, and they've done a survey where now 82% of people think we're heading to a recession. What do you think it'll do to that? And all these people talking, the property boom's back, it's good times. But if 82% of people think bad times are coming, and then if they do more cuts, isn't it just going to be a self-perpetuating cycle? So, however, the RBA may need to do a lot more heavy lifting and cut rates to a new low of 0.25% by the middle of next year, according to the revised and more downbeat forecast from both ANZ and the National Australia Bank in the past week. The biggest winners from these low rates will be those taking out a mortgage to buy a home, while the most disadvantaged will be Australians who rely on their bank savings to earn interest. Both major banks already expected Australia's central bank to cut rates to 0.75% in November, but the next cut might happen as soon as October if there was further weakness in the labour market, revealed next week, Mr. Oster said. So it'll be interesting to see and follow what's happening. I mean, what I will do is I will just bring up here. We can have a look at trading economics, and we can just see what our interest rates have been. I'm sure most people are familiar with it, but I mean, guys, they've cut interest rates so many times to keep us all going, to keep the economy going, to keep the housing going. And we've just looked back here. I mean, this will go to 10-year range. Oh, we'll go to max range. It looks more appropriate here. You can see, I mean, last recession we had, well, it wasn't even a recession. The 2008 GFC, the amount of cuts that came to rates there, and they bumped it up a bit, and we've just been heading down since then. So if they were to do the same intervention to the cash rate here, you'd have to head to negative territory. You'd have to. Would people have thought that negative interest rates could even have been possible 30 years ago in the early 90s? Was that even discussed? Would you even be considered as not being insane? It seems very difficult to appreciate. It really does. So, on Thursday, the Bureau of Statistics will unveil its eagerly awaited unemployment figures, and if it rises sharply above its current 5.2% level, the RBA will be concerned. Well, yes. What I will do is, guys, I'm going to write down I'll put a card here to 637. I'll put a card here to the 9.2% video I did, the original one on Roy Morgan's methodology. And I think they're saying we're sitting at about 8.2%. The rule of thumb is you essentially double what the RBA says, what the ABS says, and then you have our actual unemployment rate, because the methodology they use, and the fact that 1 hour a week is considered enough work to consider that you're employed. We need another approach. We need, are people earning enough to be at the poverty level? Are they employed enough to be at the poverty level? That would be interesting to see. How many people are actually there? It would probably be very depressing. The Reserve Bank has been particularly vocal about wanting to see the jobless rate fall to 4.5% to boost wage growth, consumer spending, inflation, and eventually GDP growth, all of which are at or near decade lows. Well, yes, our economy has been depressed since 2008. We've been growing below trend since that time, about half per GDP. On a per capita GDP basis, we've been growing at half what the trend is. If you ignore GDP, if you ignore per capita population, we're about a quarter lower than we are. So it shows you how GDP has how population growth has affected us. So, economic growth continues to undershoot the Reserve Bank's forecasts, such that unemployment is likely to edge higher, with inflation stuck below the 2 to 3% target band, Mr. Oster said. Because of that, he now predicts the RBA will implement a further cut down to 0.5% in February, an unconventional policy, quantitative easing in other words, similar to the ECB's drive to buy bonds. So, unconventional measures. The RBA Governor Philip Lowe told Parliament in early August that all options were on the table if the domestic economy worsens, including cutting rates to zero or even negative levels. It's possible we end up at the zero rate lower bound. I think it's unlikely, but it's possible, he said at the time. We're prepared to do unconventional things if the circumstances warranted. See, I'm more of the argument that we need to look at using our tax system and simplifying that to allow more money to flow in the market and to give people more confidence ongoing. I'm unashamedly stealing one of Clive Palmer's policies and repeating it, which is to allow people to claim the interest on their primary residence if they have a mortgage, rather than all this other stuff. Why don't we look at that? That's unconventional. That's more unconventional than buying bonds back. It'll allow the people to keep more of the money that they have, that they own. It's their money. It's not the government. It's theirs. And it will make it easier for people to buy houses. But, this is what fundamentally pisses me off, is that you have to pay the state before you pay to keep a home, shelter for your family. That's the situation we're in now. Okay? I don't like that. I do not like that at all. It just irks me. It irks me. So what can they do? The government can then implement, sexist discrimination policies and have social justice garbage and all this other rubbish, or can throw billions or millions of dollars to bridge the gap with Indigenous Australians, and 30 years later, nothing's changed. Nothing's changed. So I stand by the government is only good at one thing, and it's wasting money. That's their skill set. They've leveled up that skill. They have maxed that skill. They're at level 64. They're doing endgame content on that. Thumbs up if you know that reference. Oh, boy. So, NAB believes this may involve buying government bonds or long-dated purchase agreements to lower bank funding costs. We think the RBA will be extremely reluctant to consider a negative cash rate, said ANZ's head of Australian economics, David Plank. Like his fellow economists at NAB, he agrees that rate cuts could come sooner if the weaker domestic data warrants. In the last few months, RBA Governor Philip Lowe has pleaded for the Morrison government to borrow more money at record lower rates to pay for fiscal stimulus measures. These measures might include new infrastructure investment, cash handouts, or even bringing forward the $158 billion income tax cut, which are set to be introduced in 3 stages until 2024-25. Yes, I like that idea. That's good. Bring that forward. Bring it forward now. Don't pay for it by going into debt. Pay for it by cutting services, cutting things people don't need. There's a lot of dead weight there, guys. But then again, that's the problem. That's the problem. They'll fire people and they'll hire them back as contractors and pay them more, which is good for the people who are taking advantage of it. I completely respect that, Unless the government delivers a meaningful fiscal stimulus, a further cut to 0.5% by mid-2020 is likely, along with the adoption of non-conventional monetary policy measures, Mr. Oster said. However, Dr. Lowe's pleas for extra spending appear to have fallen on deaf ears, particularly due to the strong desire on both sides of politics to bring the budget back into surplus, with the government pointing to its tax cuts and current infrastructure spending plans as providing enough stimulus. Yeah, I don't think it will. I can't see what we're investing in. We looked at it the other day, trains, roads, these type of things. None of it is innovative. I would rather, how about we look at creating some SCOs, some special economic organizations or special economic zones? Or what about if we implement zonal taxation around the country? So you're paying different tax rates at different portions of the nation. Why don't we try and do something smarter or a bit different? Try and, encourage private enterprise, or maybe essentially to take the burden off the back of private enterprise. What if you had a portion of the country where people could freely travel to and work in this region where they paid lower tax, but it was easier to hire and fire? How about that? What do you think would happen there? I think people would rush to work there. Maybe I'm just too naive with regards to how willing people would be to get up and find some work. But I think they would. So, before the RBA meets again next month, several central banks around the world will have cut their rates even further, or signaled an intention to introduce economic stimulus. The Bank of Japan will make its decision on Thursday, with Commonwealth Bank's senior economist Belinda Allen expecting the Bank of Japan to leave monetary policy unchanged, but the risks are growing for further policy easing. Meanwhile, the United States will almost certainly receive a 25 basis point rate cut from its Federal Reserve on Thursday morning, an attempt to protect the US economy from slowing growth, partly due to Mr. Trump's protracted trade war with China. Markets have priced in a 94% likelihood of a US rate cut next week. That will not be enough to satisfy US President Donald Trump, who has been urging the Fed boneheads to aggressively cut rates into negative territory. However, Mr. Trump's tweets posted after the ECB decision suggest he's even more incensed by the independent Fed's refusal to bend to his will. They are trying and succeeding in depreciating the euro against the very strong dollar, hurting US exports, and the Fed sits, he tweets. They get paid to borrow money while we are paying interest. Negative interest rates are usually a last resort, used reluctantly by central banks to battle weak economic growth. I think they're a relatively new invention. Does anyone know if they've existed historically prior to the last few decades? Prior to Japan? Was it ever a historic precedent? The US president also did not address the risks of financial market tensions that central banks in Europe and Japan have confronted as a result of their negative rate policies, or the larger issues that negative rates have not yet secured higher growth or higher inflation for those economies. I mean, we don't want to end up like Japan. We don't. That's another fear, is that we end up like Japan, just stagnant. I remember when I was in Tokyo for a uni trip, and I was, we were catching the subway around with one of my uni friends, and I said, "Oh, what are all these barriers here?" And he goes, "Oh, suicide prevention." So, for protracted economy, Japan has a lot of problems. And I mean, we've all seen the footage of the lack of what sex that people are having, their population growth issues. Yeah, it's not doing as well on a lot of demographic issues either. Anyway, guys, like, share, and subscribe. And stay tuned today. I've got a few other interesting videos coming up. And I'll see you all later. Take care.